Hi, welcome to Let's Talk Forex. Today we're excited to chat about a simple strategy that will help beginners get started in the complex world of Forex trading, and it's known as the 5-3-1 trading strategy. As always, please reach out to us on our social media channels or alternatively contact us at podcast@fxscouts.com.
Hey, Alison.
Hey, Chris. What's happening?
What's happening? Not much, to be honest. You know, it's a Tuesday morning. We're recording a podcast. That's what's happening.
Yeah.
But before we get into it, I just wanted to mention that we've got a new page going live on our site, which we're quite excited about.
Yeah.
Which is an events page. As you know, a lot of the brokers we work with, they have regular webinars and other events. And what we're going to do is we're putting together a page that has all the best webinars from the best brokers all in one place, like a one-stop shop.
Yeah. Which I think is very helpful for, new and experienced traders, actually. There's a lot of these webinars are, they've got a range of webinars for both beginner and experienced traders, and they've got lots of different topics for these webinars. So I think it's it's a very useful resource, I think, for traders.
Exactly. It will be. And I think it's quite hard, I think, for more experienced traders to find webinars specifically for them. So hopefully this will highlight, this will be useful for them particularly.
Yeah.
Because you get a lot of webinars, which are, very important for beginners, on all kinds of stuff, support and resistance and setting up a trading plan, all that. But when, if you're trying to understand, how to use fractals in setting support and resistance or something like that, then, it can be a bit harder to find. So exactly. So, we'll put a link to that in the show notes. Hopefully you guys will find it interesting. But yeah, we're today, let's get into it. We are talking about something called the 5-3-1 trading strategy. And as most of our listeners know, like the Forex market, it's the most active financial market in the world, by far the largest. I think about $7.5 trillion US every day goes through it. And it's incredibly volatile. And when you're just starting out, it can be really overwhelming. There's so many Forex pairs. There's so many ways to approach it. And a really good, well-planned trading strategy is what you need. And it can be difficult to build a trading strategy. We understand that. And this is where the 5-3-1 comes in. It really simplifies that. And it really helps beginners develop a clear trading plan for getting involved in the Forex market.
Yeah, I mean, other strategies focus on sort of trading mechanisms and chart patterns and indicators, and it's so hard for beginners to know where to start. Whereas the 5-3-1 technique allows traders to really narrow down the Forex pairs they want to trade, the trading strategies they want to use, and then choose a time of the day to trade. And then traders can use demo accounts to test different combinations of currency pairs and strategies and timings to really master this technique and refine it and come up with something that really suits them.
Yeah, exactly. And it really helps lay the foundation for building a trading plan. So a well-defined trading plan has more chance of success and can be quantified for assessment and improved as required. This is a really defining feature of it. Also, it's really important for building trading discipline, and setting up building a healthy trading psychology. When you've got a trading plan that you can fall back on in times of emotional stress. So yeah, the 5-3-1. So what is it? So each of the numbers of the 5-3-1 trading strategy has a really important significance. The 5 is for the 5 pairs, the 5 currency pairs you're going to be trading. The 3 is for the 3 trading strategies you're going to be using. And the 1 is for the one time of day you're going to trade. So let's start off. We're going to look at the 5 currency pairs. So choosing the right currency pair to trade really is going to set the tone for your entire trading strategy. And it's really important to become familiar with specific pairs and how they behave. And they've all got unique characteristics. So it's really important to get this. It also, when you focus on just 5, it stops you from getting overwhelmed from all the options that you have in the Forex market.
When you're choosing the Forex pairs, there are a few things that you can look out for. So just from the outset, just something to be aware of, when you're creating your list. So firstly, you want to be aware of volatility and liquidity. You want pairs that have good liquidity, which means that they have lower spreads and are less volatile. So, a pair we always talk about is the Euro USD, which is a major Forex pair that is traded, around the clock during the week. So it's got a lot of liquidity. A lot of people are trading it. So generally it'll be quite an easy pair to buy or sell if you need to. Then others are the USD JPY and the Pound USD are also they're very good choices and they're very heavily traded pairs. So generally you'll find it's not difficult to find times to trade those pairs. And then next you'll look at your time zone. So you want to choose pairs that are active during your trading hours when you're awake. You don't want to be waking up at 2:00 in the morning to trade. So if you're in the European time zone, then of course the Euro USD is probably a good pair for you to trade because, you can trade it from the morning and right into the afternoon when the London session then overlaps with the New York session.
And this is true for most of Africa as well.
Yeah.
Because it follows in a lot of the European time zones.
Exactly. And then lastly, you want to be aware of correlation between currencies. We've spoken about correlation, I think, quite a few months ago in our podcast. I'll find that podcast and put a link to it because it's actually a very important subject to understand. And you don't want to choose pairs that are highly correlated with each other, especially if they're highly positively correlated with each other. In other words, they move in the same direction because you just increase your risk of losing on those pairs. So that's another thing that you want to be aware of when you're choosing your pairs is to choose a variety of pairs and understand their correlation, whether they're negatively or positively correlated, which means if they move in the same direction or they move in opposite directions.
Yeah. And also consider like your own personal interests and knowledge. So if you have an affinity for certain regions, Asia, Europe, the Americas, then you're going to want to, look at the pairs from those regions. You'll also want to look at historical data and trends in these pairs. So you want to analyze historical data, and you want to look at the trends, especially over market events that have happened in previous years, because you're going to want to understand their behavior when the market's doing a certain thing. And then risk management, just something we bang on about all the time. It's really important. Ensure that the currency pairs you've selected align with your risk management strategy. A lot of pairs, especially minor pairs, and exotic pairs. So, stuff like the USD ZAR, these pairs are much more volatile and there's going to be a higher risk that comes with them. So make sure you understand, what risk you're getting into with these pairs. And then consider when the pairs are going to be the most active. I mean, there's something you touched on, Alison. They're not always going to see the same level of activity at all times. So what you want to focus on here is overlapping of the markets. So if you're trading the Euro USD, the most active time in the Euro USD is going to be the overlap between the London and the New York markets. And, if you're trading the Australian dollar to the Japanese yen, then you're going to want to be trading the overlap between the Sydney and the Tokyo market. So that's something that you really want to be aware of. Because, more activity means more liquidity, means better chance of price movement.
Exactly. So how do you go about choosing these pairs? Well, what you'd do initially is you want to create a watch list. So, as we've been talking about already, you want to create a watch list of your currencies according to their preferred trading hours, taking into account the different trading sessions and the liquidity of these Forex pairs. And you can make a list of pairs with different times to gain exposure to a diverse range of Forex pairs and their associated volatility while you're making that decision. And while you're doing that, then you want to, as you touched on, Chris, you want to review the latest news and economic data because it helps you identify the currencies most likely to move based on the available data. And then you can also establish your trading preferences by getting a perspective on the fundamental price movements of the currencies in your watch list. So basically, create a watch list of those different currencies for different times of the day, and then look at the news and economic data of those different currencies and see how they move based on that data.
Mm-hmm. Yeah, exactly. You also want to conduct inter-market analysis. So we're not going to be looking just at Forex pairs here. You want to look especially at commodities. So for instance, oil and the Canadian dollar are very closely linked. So any movement in oil prices could be an indication of a potential move in the Canadian dollar as well. And the same is true for the US dollar and gold. They're very closely linked as well. And so these are things you want to look at. All traders need to establish is whether the two move in the same direction or inversely. I mean, this is something you were talking about, correlation, but it also happens between asset classes. This can be a bit complex for beginners at first, but it's very common, and it's very obvious. So just spend some time, learn about it, and it kind of gives you an advantage. And once you get to track these movements in other markets and you know how they're going to affect your the currency pair that you've chosen, then it gives you a leg up and more insight.
Yeah. And also it helps you to hedge your positions, of course.
Mm-hmm.
Gold and the dollar move in opposite directions. They're both sort of seen as safe havens, but in sort of different circumstances, then, it gives you an opportunity to hedge if you feel like you're sort of putting your money a bit at risk.
Absolutely.
Yeah. So I think that's quite a good overview of how to choose your 5 currencies. But if you want to talk, the number 3 now denotes the 3 trading strategies that you would choose to trade these various currencies. And choosing a trading plan is critical because trading requires a really deep understanding of what moves those currency pairs. So if you keep your plan focused on just 3 specific trading strategies, you can focus your technical analysis on specific time frames that best suit your indicator. And it also ensures that you don't become confused by using too many indicators to the extent that they begin to contradict each other and show mixed signals. So it's really something that you also want to simplify in this 5-3-1 plan, is to choose 3 very simple strategies and choose the technical indicators that produce the signals that you'll trade with.
Yeah, and this so these 3 trading strategies you're going to choose, they can be broken down further into 3 components. So you want a specific trading style that works best with your risk appetite and your financial goals, right? So look, there's lots of different trading styles. There's scalping, there's arbitrage, there's intraday trading, high frequency trading, swing trading, carry trading, positional trading. So have a look at something that's going to work best with your risk appetite and your financial goals. Then you want to choose a few indicators that work best with your chosen style. So moving average based indicators like the MACD and the stochastic oscillator, they work really well for day trading. For momentum traders, they're going to be looking at something like the RSI, the relative strength index. So make sure that your trading style is compatible with the indicators that you're going to use, and make sure you understand them. It's a pretty important part of this.
Yeah, absolutely. Yeah, I mean that's it's key. And you can practice finding those entry and exit points for your currencies on a demo account, and you can test out indicators with each of your trading techniques to solidify your trading strategy. And this is also the stage when you learn to incorporate risk management techniques. So you may, some traders prefer to set very close or tight stop loss and limit orders to lock in small profit gains and prevent losses, while others use trailing stops to capture whatever gains or profits they made during long-term momentum trades. But again, we've covered stop losses and take profits in a previous episode. So learn a little bit about that risk management and when it's appropriate to set close stop, when it's appropriate to set slightly wider stops, and another thing that you also might want to watch out for when you're trading on your demo account is stop loss hunting, which is something we also covered before.
Yes, we did.
So yeah, I'm not going to labor that point right now. It's quite a long explanation, but go and check out that podcast we did on setting smarter stops. And just take those points into consideration when you're practicing these strategies.
Exactly. So yeah, ultimately you want to have three different trading strategies with rules for identifying your signal, your trigger, when you're going to open a trade, how you're going to manage your risk, and how you're going to close your trade. And having these three strategies means that you'll likely find trading opportunities on most days, but you're not going to be overwhelmed by so many that you don't know when to trade.
Yeah, exactly. So yeah. And lastly, you the number one in the 531 is your one time of the day to trade. So, as we mentioned, Forex trading is a huge market and it's available 24/5. And a lot of traders, are tempted to try and capitalize on as many opportunities as possible. But this obviously has its downsides. Firstly, if you don't have a defined timeline, you're going to get exhausted trying to capture every opportunity and be sitting in front of those charts all day. And we've also found like that no break trading leads to fatigue, and that it impairs your decision making ability, which is something you really don't want to be doing when you're trading, and especially with real money. It just increases the stress of trading too much. And also, if you're trading all the time, it leaves you very little time to solidify your trading strategy.
Yep.
I mean, regular monitoring and fine tuning are fine to enhance your success in the Forex market, but you certainly don't want to be sitting at the charts all day.
No.
And for most people, that's not possible either. So finding one time in the day to trade really is key to the success in this 531 trading plan.
Yeah, and if you have the same time to trade every day, it really helps build trading discipline. It becomes a habit. And especially if you've got your trading strategies and you've got your currency pairs and you're sitting down the same time every day, you're going to get a deep insight into how the market reacts to news updates or economics events. And this is because supply and demand of each currency varies at different times of the day. And this really affects liquidity. And keeping your time consistent can help you gauge whether the needed liquidity is available at a particular hour or not. And you can help identify distribution accumulation zones for your chosen currency pairs to make much better trading decisions. Practice makes perfect. And if you're sitting down at the same time every day, then you're just going to get better and better over time. Yeah, so choose that time that fits your trading plan, provide suitable liquidity for your chosen Forex pairs. Experienced traders, good traders will tend to pick a time when their chosen currency pairs are the most active, as we've discussed, and take into consideration your daily routine. It's what you touched on as well, Alison. Like if you've got a 9-to-5 job, then, you're going to have to work around that.
Yeah.
So all these things take into account.
Yeah. Well, I mean, I think that covers it. So I guess just as a sum up, the 531 basically allows traders to pick their favorite Forex pairs, 3 favorite strategies, and 1 trading hour. Obviously, the 5 stands for choosing 5 currency pairs that suit your risk appetite, your trading style, your time of day to trade. Number 3 stands for developing 3 strategies with various combinations of trading styles, technical indicators, and risk management measures, but not making you feel overwhelmed by the plethora of trading strategies out there. And number 1 guides traders to choose 1 time for trading during the day. And often traders choose the overlapping hours of 2 of the top 3 most active sessions, or they find a time in the day where they can trade if they've got the 9-to-5 job. But this keeps you disciplined. It keeps you from becoming fatigued and overwhelmed, and and it just gives you a really focused time to trade. So I think that's probably it.
Yeah, it is. It is. That's great, Alison. Next week, what are we talking about? That's right. Next week, we're talking about the difference between stock CFD trading and Forex trading, which should
Yeah.
be quite an interesting one, I think. Because you mainly talk about Forex trading on here, but I know there's a lot of interest in stock trading. And the two are actually quite different,
Yeah.
which is odd because brokers will offer the two side by side. They'll say, hey, do you want to trade Forex? And you can trade stock CFDs. So people, I think especially beginners, feel that they can just dabble in either. But there's a lot of differences between the two. And we're
Yeah.
going to run through those and hope people
Yeah.
give people a good grounding.
Cool. Yeah, I'm looking forward to that.
Good. Well, thanks, Alison. I'll speak to you then. Have a good week.
Yeah. Cheers, Chris.
Bye.